Guys, Nike just crushed earnings. Now remember, if you're new to the channel, the reason I do earnings results is in order to show you guys, talk about the companies, talk about the reporting. My personal opinion is I could not care less about quarter-to-quarter earnings results. My goal is I make a thesis about a company over a long period of time, and I use the quarterly earnings results when people beat up a company too much, and I use an opportunity potentially to buy or wait for it and add it to my watch list because people are being dramatic. Look at this. Nike was expected to make 65 cents a share. They made 85 cents a share. Nike was expected to generate 12.5 billion in revenue. They generated 13.3. Crushed all across the board. They're down. They were down 3% at one point. They were down 6% at one point. Guys, this is just irrational. So I'm sitting there thinking to myself, okay, we had a time 2 years ago where if you missed both, but you had good guidance, your stock skyrocketed. It was irrational there. We're going to get to the point where no news is good news, just like we had to a point before where no news was bad news. So where are we right now? Well, with Nike, we're at down 2% when they crushed expectations on both revenue and profit. Remember, I love this. I love the fact that they beat both revenue and profit and the stock is down. That's irrational to me. So your next question should be, should I buy Nike stock? Well, I don't know about that because remember, this is 1 quarter results. 1 quarter on a company that's going to be around for a very, very, very long time. Nike's on my list of companies that I want to own for the long run. But remember, I want to own them at the right price. I'm not a level 1 investor where I like this company, therefore I'm going to buy it. I'm a level 2 investor. I like this company. Therefore, everybody probably likes this company. So level 2 thinking says they probably will like the company so much that they'll bid the stock price up to nosebleed levels. So first thing I'm going to do is show you Nike had an all-time high, 52-week all-time high, November 5th of last year of 180. It's currently below 100. It hit a low of $82 recently. Okay, now it's almost even. I mean, this is, guys, how can a stock fluctuate 3, 4, 5, 6% in a matter of minutes when they crushed earnings and revenue? Crushed it. This is a company that has 45% gross margin, 10 to 12% bottom line margin. They pay a reasonable dividend that they can easily afford. It eats up less than half their 5-year free cash flow average. They have a high return on invested capital. Let's go check out their 8 pillars just to see how great the company is. Okay, so I'm willing to bet this cash flow drop in the last 5 years is from working capital because if you look at their revenue and profit, both up significantly. But look at these metrics, 5-year PE and 5-year price of free cash flow. Too high. Unless this company is going to grow up major, the reason you should pay a high multiple for companies is a very high return on invested capital and or a high growth rate. You want some combination of both because you don't want a company growing a high rate and a high revenue growth rate, but they're not able to get a good return on that money. That's the big key. And the return on invested capital here of 20% is phenomenal. The market average is 10% on a year-to-year basis. So 20% over a 5-year period, that's phenomenal. This company knows how to make money. But it's entirely possible to overpay for a good thing. That is a fundamental thesis in value investing. The level 1 investor thinks this is awesome, I'm going to buy it. The level 2 investor says everyone thinks it's awesome, they're going to buy it, and therefore the price is going to go to a level that is not justified. So what is justified for Nike? Well, let's take a look at some of their analyst estimates here. So the reason I like looking at analyst estimates, first off, analysts are very intimately involved with the company, so it's a good starting point for me in terms of where the markets are feeling that Nike will be. Because these analysts talk to Nike on a regular basis. They really get involved with the company. However, and there's a big however, analysts do have a bias. I don't look at their buy-sell ratings because they're all garbage. But what I want to do is look at the guidance here. $3.75 per share in profits estimated for this past year, up to $7 in the next 4 or 5 years. Pretty good. That's doubling in 4 or 5 years. But look at revenue, guys. Very slow revenue growth. Look at this. Mid-single digits. It's not a fast-growing company. They're huge. And what's going to happen when they want to start selling shoes to the very kids who make the shoes in their sweatshops? That was a joke. That was an absolute joke. Now, one thing I do like about Nike is they are starting to sell more direct to consumer. What does that mean? Higher margin, right? When you're selling a shoe that costs you $20 And before you were selling it to the store and they were selling it for 200, you're probably selling it to the store for 80 or I don't know what the exact number is, 80 or 100 bucks, something like that. Now, if you're selling it direct to consumer, you're getting that full $200. That's all full margin. That's all adding to the bottom line margin. So I think there's possibility that as time goes on, their bottom line margin will increase. So what does that mean? Well, our stock analyzer tool. Guys, I just got some great data on this. We have thousands of users on our software here. A conservative number, the number we knew since we started tracking, 1.108 million stock analyzers have been hit this year. It's at least that. It's probably 1.2 to 1.3 based on the timing of when we started it, and the year's not done yet. This is such an amazing tool because it gives people an idea of where they should be. I always tell people, use stock analyzer tool first, and the reason being, don't spend your time understanding the ins and outs of the business if the numbers don't even make sense. But if you put the numbers in, if you put your stock analyzer tool in as your present value of future cash flow, and it tells you what you should pay for the company today, if it's around that number, now, by the way, look at Nike. It's now up 1.5%. But if it comes around that number, what's the idea? Then you do your research. Let's say Nike comes in and we say it's worth 40, hypothetically. Would you do any research right now? Why waste your time? It's got a long way to go. Add it to your watch list at 60. Add it to your watch list at 60, and then you can go back and do some more research on it. That's the key for why this tool is so useful. It just helps keep everything in an organized place so you do the least amount of work. But when you do work, it's going to be the work you need to do. So let's go sit here and look at our stock. Okay, now it's up almost 2%. All right, so I'm going to do a 10-year analysis of a Nike. Now, I want a low, middle, and high, and I want to be very low conservative, but very high aggressive. When I say very high, though, something that's at least attainable. As the world gets wealthier and wealthier, and as Nike grows, what's possible for them on that high revenue growth level? So low side, I'm going to go with 3% because, inflation over a long period of time. Yes, inflation recently is high. Let's just keep it low and say 3% revenue growth. I think that's super low, but that's the key. I want to pick a low number. I go, there's no way. I'm like, they're going to beat that. Middle number, let's go with 6. High number, 9%. Okay. Profit margin. Well, lately they've done 10, but I'm going to go with 11.5 and then 13% because of what I said before. What I said before was, as they sell more and more direct to consumer, my guess is their margin's going to increase. So let's put in that 13%. That's 30% higher than they're currently doing in the last 10 years. That's why I like that number. Free cash flow, I'm going to mimic exactly that. It's funny, actually. I think I'm going to stick with 10, 11, and 13. I don't usually do that, but I'm going to do that here. Now, for PE and price of free cash flow, remember, over long periods of time, the market's going to do about 15 times earnings and profit and free cash flow. But Nike is a large company with a very big moat and a high return on invested capital. So can you pay more? Can you pay less? I don't know the exact right number. 12 seems way too low. 18 or 20 probably seems too high based on their growth rate, but they have a high return on invested capital. So I'm going to go with 15, 16 and a half, and 18. And I just want to give myself a wide range for the company. Because remember, wide ranges are okay. And I do the same thing for the price of free cash flow. I do the exact same multiples for these. Now, finally, for desired annual return, I need to pick low, middle, and high. And as I make my assumptions larger, I want a greater desired return, because that means a higher margin of safety. Because the more you pay for something, the less your return. So if you want a high return, you want to pay less. See how that works? The more you pay, the less return. The less you pay, the more return. That's the key here. So if you can get 9 or 10% by investing in an ETF, give yourself a reason to buy this company. Now, a large company, but making aggressive assumptions, I want to go high. I'm going to go 12, 14, 16. Now, my guess is the real value is going to be somewhere in the middle of this. But I still want to have this number saying, is it even close right now? Let's see where it's at right now as I've been doing this. It's up 3.5%. It's up 3.7% now. So they must have announced something else. So I hit the analyze button. The stock is currently at 107 after hours. Here are my prices. A low of 40, basically a high of 65, a middle price of 48. It's on my watch list at 55. So actually, I'm actually going to change it to 60 on my watch list. And the reason being is I want to be notified when it hits 60, not because I want to buy it then, because I want to start selling puts at lower prices so that I can get paid to wait and buy it at much lower prices. So guys, if this makes sense to you, if you're like the 1,000,001 times that this has been used in the last year and you want to be involved with it, check out everythingmoney.com. We have a risk-free guarantee. Get everything on the software, including the watch list right here. I have how many stocks on my watch list right now? I have 103 stocks that notify me when the stock hits the price I want it to hit. Check it out, everythingmoney.com, risk-free guarantee. If you don't like it in 30 days, email us. We will give you a full refund of your money. Thank you very much for your time and subscribe to the channel.